Okay, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, April 16th. Great to be with you guys this morning. We're about to get the release of weekly jobless claims. I thought I'd kick it off a couple of seconds early here to see the release. Now, over the last 3 weeks, we've already lost 16.8 million jobs, and we are expecting a print of 5.5 million on last week's 6.6, and surveys out in about 20 seconds. I'll let you know that number. But hey, Gary, how's it going? Jay, Pete, Peter, Ted, great to see you guys this morning. All right, we're 10 seconds out. Here's DXY on the weekly. It's still about that 99.91 level to me, that former swing high. Survey says 5.24 million. Okay, so less than expected. No revision to the previous numbers release. Housing starts worse than expected. Building permits also a little bit better than expected. So you got a little bit of a mixed print here, not expecting much. Quick look at the near term here for DXY. Pretty much right on par with what we expected. So to start things off, good morning again to everyone in the room. On the menu for today, we got DXY, Euro, Dollar CAD, Aussie Dollar, Dollar Yen, all from last night's updates. Dollar Swiss, Kiwi dollar, sterling dollar, and obviously we'll hit gold and SPX. Any other questions or trade setups you'd like to review, as always, feel free to throw them on the message board. So, quick look back on DXY. Our premise from the start of the week has been to look for failure either here at this 99.91 level or at that sliding parallel just higher. Key resistance, obviously look at the high week close, and that's still a bit far off from where we are now, but point is, one of these two levels is what we're looking to see failure if the move is still lower. Now, this is DXY from the weekly chart. When we delve deep into this on the daily, it's basically a contraction or consolidation range, contractionary range, whatever you want to call it. But for the week, what we want to see tomorrow is a maintain close below this 99.91 level if possible. Here's what it looks like on the daily chart. I showed you this, guys, on Tuesday, but I'm not really sure I really want to focus on this slope. So I'm going to remove this to show you a little bit holistic of a view here. Series of lower highs, series of higher lows. I still think you need to see a more significant break. Now, we dipped into, tested, and rebounded off two major levels that we're looking at this week. The objective monthly open, which comes in at 99.01, and the objective monthly opening range low, which we executed right here on the first, and that was 98.91. We delved just a little bit deeper off that. So all things held constant, you have a clean monthly opening range. You're waiting for the break. Gary says, if possible later, could you look at dollar peso? Yeah, sure, if you'd like. I've been writing about that a lot on Daily FX. It gets insane page views. I couldn't tell you why. Lots of interest on that. Listen, it's stretched into a major big resistance level. I still think there's pullback on it. I don't personally trade it, Gary, which is why I don't bring it up here, but we'll definitely take a look. No worries. So any questions here on the DXY? Here's the intraday chart. Again, we got a topside break of this descending channel. Here's the recovery. There is 99.98, excuse me. The 618 is 1.25. Pretty much the max I would want to see this rally if the move is still lower. Now, if we are just to complete a basic 100 off the high, so like 2 equal legs down, just to show you something here, even if this is just corrective, would essentially take you down to like 96 zone. So even if that was an aggressive, the 618 takes you down into the 98 zone. So, if this interpretation is correct and we just did a false break of uptrend resistance, we should still see that one last leg lower. All right, just my humble opinion, but that's what we're looking at here on DXY. Note the fact that we did, for all intents and purposes, mark an outside day reversal yesterday higher, okay, off the monthly low. Typically, that would be near-term constructive. You look for a larger rebound. But with where we are in trend, where we are in price, You know, I'm just not really willing to take a big bet on that one. Now, the euro decline, which is essentially the DXY ascent, that one looks a little bit clearer. Any questions here on DXY? All right, that's number one. Let's just jump into the operable trades. Here's euro. And here's what euro looks like on the weekly. And here's what euro looked like last night. So we had this little contractionary range again. We broke to the downside, rallied and failed almost just right ahead of the weekly open. So we're looking for that last drop in price, right? 108.53, we had 108.31, 2618's a longer term, and just a near term for the advance just lower. I was kind of hoping we would get a rebound off that, and we did. Okay, we actually marked a low. Oh, well, I'll go back to the daily chart in a moment. We marked a low literally at 108.53. 618 of the advance, here's the recovery. I would allot this even a decline down into 108.30. Major pivot in price, 618 retracement of the entire March rally, which is basically the yearly range. And just a level that we've been watching for a while, even these swing lows right here. Excuse me, this pivot that we made right here. So 108.21, 108.31 if we break lower, but we're essentially looking to see if we can catch some lows here. Top side targets aren't changed. If you do see the recovery, you still need to mount the weekly open around 109.50, and then they go right up. These are just soft targets. If we start to move higher, this is the real big one, the April open at 110.30. That's like the breakout zone. We mount that and you're looking for 111.60s. But until we do, again, this is a simple monthly opening range, which is still intact. So we always try to break it down to basics and as objective as we can. And while I'm, you know, I would love to see the dollar get lower. I'd love to see a rally in the euro. We have to take the trade on its own merits. So looking for exhaustion lows in euro, let's just call it that. Any questions on euro? So no change to any of those levels from yesterday. We simply came into this target, we rebounded, we're right back at the 2019 close low as resistance. You know, if we make one more stab, look for that region. Beyond 108.20, you're risking like a whole resumptive drop. So cautiously bullish on euro. And note that while the DXY did make an outside day reversal yesterday, the euro did not. Okay, we closed above the previous day's open. So not a true outside day reversal, although the range did cover the previous day's range. Not quite the merits that you would see. Okay, that is number 2, euro dollar. All right, dollar CAD. So here's what Loonie looked like last night. So we were looking at this with a break of the descending channel formation. Ideal scenario, okay, you get a little bit of a pop higher to short off one of these two levels on the back of this breakout. It kind of just fizzled out. Here's dollar CAD. Okay, here's the same chart from last night. We fizzled out right into that upper parallel. We tried to make another run in overnight trade, but you failed right at those same highs. The pullback now right at slope support. So you want to choke up the levels a little bit. Okay, as far as your invalidation, probably leave that. Weekly open is right at 39.20, but I'd probably leave that just a little bit above that, 39.65 or so. But you get the picture. Even if this is a 5-wave advance, which it looks like it could be, you'd look for like a 3-wave corrective move to get a little bit better of a position on the long side if we get lower. But I'm still looking for an exhaustion high here in dollar CAD for the pullback. Yesterday, this did look like an objective break of the weekly opening range with that move, and it ran through. Not to mention that we just broke downtrend resistance near term off the highs that we made from March. So here's what it looks like on the daily chart. And again, the 38.2 at 41.65, just a bit higher. You know, we didn't even make a 38.2 bounce. So I'm hard pressed on this one. If you're holding shorts off the high, you'd go break even or better here. If you get a move back below monthly open support at 40.58, I think you're good to go. If you're looking for fresh exposure, for me, I'm not really comfortable trying to press a high from here. So I'd still be looking for a move higher to fade closer to uptrend resistance. Ultimately, the breakout is just looking for the pullback. This is the test, guys. This, again, objectively, this is a topside breach. It's a breakout. You broke monthly open resistance. You broke downslope resistance. You broke upslope resistance. So as long as we maintain stance above 39.65, 39.60s, you're still basically constructive. Breaking trendline resistance, checking at support, and move right off. Here's what it looks like on the 60-minute, by the way. I was stoking this morning. So even from a momentum profile, we always talk about what we look for in RSI. We use it a little bit differently than conventional means that tells you, oh, we're overbought, look to sell, or we're an oversold, look to buy. While we look at that, we look at also support and resistance in basic oscillators. So, short biases usually typically will hold below the 60 stances resistance and momentum. And if I put my cursor here at 60 and you look across, well, we've been holding there. This was a behavioral change on the breach of downslope resistance. If this break is legit, downside moves in RSI should find support ahead of 40. All right. So that's why I think even if you get a little bit more of a pullback here, you probably get better entries for a slingshot higher. All right. And again, as objective as you can get, it is still in the monthly opening range. It's a massive range, but nonetheless, that still holds. So if we do clear that by some chance, look for that to give you guidance heading into the close of April. And a lot of people will continue to correlate this, I guess, justifiably so at this point with what's going on in oil prices. Guys, we just touched on this earlier in the week, but I just want to show you, the key weekly chart we've been looking at with oil still has this thing at downslope support. Here's the pitchfork we've been following off the highs from 2015 and the highs in 2018, right? There's the 75% line. Got kind of messy last year. Really nice break and rejection this year. Median line support, median line break. 25% line has been holding support for the last 4 weeks. So don't get faked out here and jump on the bandwagon. A break lower from here, there's nothing till 1670 and then basically 11 bucks, 1070. That's not a, I guess in this market environment, that is no longer an extraneous target. But certainly not out of the woods yet here for crude. So my point being, guys, if you see some sort of major reversal pattern here, or if you see market close besting 2180 on a weekly close, that in my mind would have me looking for a high in dollar CAD. And this is a dollar CAD weekly. So while I think that you have a little bit more upside to go just because of the near-term breakout, and it did hold slope support, turned resistance, turned support again, even if this were to rally higher, I still think the ultimate move is still for one leg lower. So keep your eye on these sort of dynamics that we're looking at with crude and dollar CAD. Any questions? One other thing I was had my notes here. The crude, despite the ridiculous price range we've seen this year, the monthly opening range is very clean. Here's your April open. Okay, April opens at 2008. Last month's low is being tested or was tested yesterday at basically 1920 and change. It's a clean monthly opening range. If you break to the downside, again, that fuels the next leg lower, which the weekly chart has us pointing at that $16 target, 1670, which is, by the way, the 2001 low. So quite a precarious position here for crude. That was number 4. All right. Aussie. We got data last night from Australian employment change. Came out at 5.9 thousand. We were expecting contraction of 30. So better than expected print. Unemployment rate dropped to 5.2. It was forecasted to pop higher to 5.4. Here's Aussie on the weekly chart. And here's what we looked like last night. So on the weekly chart, the main level that you were looking at into the start of this week, we were discussing was 64.49, 64.33. It's swing low from earlier in the year back in February. And then a basic 618 in the entire 2020 range, which is 64.50, basically 64.49. Look where the high was. Look where the high was this week. So we vaulted right into it. We're poised to close a reversal candle. Near-term support 62.69, which is the 50 of the yearly range. This is the immediate focus for Aussie. Okay. Ultimately, I think there's an exhaustion trade here to the downside. Longer term, I like this being a more significant low for Aussie this year. But the immediate advance is at risk, and this is what we highlighted last night. You're coming into this confluence region. This also represented a 618 extension. Here's what it looks like on the daily chart. So a 618 extension of the advance, boom, 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 gives you 64.17. 64.50, as we said, is the 618 of the drop. Big confluence region. Big confluence region. We came right into it, and that's where we found resistance. You can always see these charts, by the way, in the previous update, guys. I have the link for you, and it'll take you to right there in that spot. So here's where it was back on the 8th of the month. We cracked through that 50. There was that confluence zone catching resistance. Okay, it's the same exact chart from over a week ago. So I think the exhaustion trade is upon us. This is where you want to worry about a little bit more of a pullback. Ultimately, I want to see, I don't even think you get that low, but ultimately, I don't want to see us surpass the monthly open, which comes in at 61.35. Ideally, you start to find some basing down there, but I do think ultimately, even if this pulls back high again, the risk is for a bigger setback. Here's Aussie on the intraday chart. Okay, here's the 120. And here's what it looked like last night. So we were sitting on that slope support. Weekly open resistance just higher at 63.46. We ran into that, failed. Here's the break. Look, basically at this point, heading into the US trade session, if this leg is going lower, and this is a true break of upslope support, like resistance should hold basically right here. I might be a little bit more aggressive of a play, maybe wishful thinking in my hand, but that's sort of what would be the ideal play for me. I tacked on a retracement this morning. The 618 comes in just higher at 63.70s, but you don't want to see anything surpass this. Weekly open resistance, this is sort of a nice spot. Next leg lower takes you 61.81, 61.35. Monthly open objective level. All right. So essentially, we're looking for validation of whether this upslope has broken and offered resistance for the next move lower in Aussie. Again, this is a correctionary play, guys. I think the broader picture for us is still on the long side, but from where we are right now, I think the risk is lower. Questions on Aussie? One of our favorite pairs, or has been for many years. Now it goes into these lulls where, last year there was like a chop fest for months, but still looks pretty clean. Any questions on Australian dollar? I think you're out of the woods for data from Aussie for the rest of the week. All right. It's number 5. The abomination. Let us delve in, shall we? Here is what dollar yen is doing. Now, ultimately, it's been a clean trade. The slope is getting sloppy. Recall that earlier in the week, we were looking at dollar yen, and our focus was for basically a drop lower earlier. Here's what dollar yen looked like earlier in the week. We had opened the week and dropped right into the April open support, right? We said near-term resistance at the weekly open, bearish inval at 108.62, which is the 2020 objective yearly open. We got a little bit of a bounce that held. We dropped. We took out 106.92, and we're rebounding off of that. Now, that's also the objective monthly opening range. So again, for all intents and purposes, we've made a simple monthly opening range. Here's what it looks like on the daily chart. Here's what it looked like last night as we were rebounding. Resistance at a 38.2. Bearish inval drops to 108.44, 108.40. As long as it holds below that, you're looking lower. We made a spike higher, didn't even get that high, and then pulled back. The question is, was that the corrective bounce and we're looking for resumption, or are we still going to make a run on the upper parallel? I'm in favor of the fact that this holds. Okay, I want to see this lower. Technically, I'd need to leave 108.40 objective monthly weekly open as the bearish inval, but to be quite honest with you, if we get anywhere past that parallel, just bail on it. It's not something I'd be interested in. But I'm just a little disappointed that we didn't get a clarity play here off of a resistance level. Now the 50, if you add it in, you could say that was a failed attempt at the 50 mark, but I feel like you're grasping at straws there. End the story, or long story short, bottom line, still looking for topside exhaustion. A break below 106.92, excuse me, is what's needed to get this thing going. Not only is that a weekly opening range break, but it would be the monthly opening range break and a break below down slope support. So a move beyond 106.92, I think would open up a much bigger drop right into the 106 handle. 2019 low day close, right around 106.05, 106.10. But you can't get too excited about this one because the last couple of days have been back and forth. Ideal scenario is to see this thing one leg lower. Bear with me one moment. I just want to see what this extension looks like. All right, let's throw that on there. Just as a soft target, if you do get the break lower, I'd be watching that 106.50 first. Gary says the abomination is being abominatory, our made-up word. Yes, I agree. I agree 100%. The only thing that was decent, Gary, in this whole move was the drop into 109.62. 106. I keep saying it backwards. My bad. 106.92. From the start of the week, that's kind of what looked really clear. Now, I thought it was going to happen a little bit later in the week as we get into the median line, but it was a sheer strike. The rebound, once this held and pulled back, and then we broke higher again, I was still looking for entries up here. I thought you'd get a bigger extension to get another entry. I missed it. I didn't take anything here. So if you took a short, great. If you're still looking for it, or if you're flat, that's what I'm on the lookout for. An exhaustion high below the weekly open. Again, your stop would need to be against that level. So that is the affectionately called abomination, aka dollar yen. That is number 6. All right, number 7, Swissy. Any Swiss traders in here today? We had a nice move on this one on the breakout, and then everything went to hell. Here's what dollar Swiss looked like earlier in the week. Looked like a real nice sort of descending wedge pattern, consolidation pattern, and the break looked legit. It broke the weekly open. It was a confluence with the upper parallel. Thought you'd get a bigger rip than this. I mean, the 50%, again, you can throw in 50s all you want. 50s aren't a real fib. But a lot of times in larger moves, they will tend to be levels of just psychological exhaustion. We've paired half the decline. We've paired half the ascent. and near-term price, I tend not to put too much emphasis on them, but I mean, look at this thing. Break through the objective weekly opening range high at 38.2 retracement, complete reversal right back. This looked like it was holding slope support, slope resistance as support, which would be again your like 101 technical analysis, break of resistance, check it as support. But even that drove deeper. And then here we are failing at the 38.2. Long story short, yesterday's range was massive, and the entire weekly range is defined by that 15th candle. All I can tell you is look for a break of that for guidance at this point. On this trade, you know, the monthly opening range is also set. On all of these setups, guys, essentially on the dollar crosses, they basically started at the monthly open, rallied, then came right back. So on all of these trades, and I love when this is the case, you have the weekly open and the monthly open and the monthly opening range lows, basically defined by a very well-defined zone. So until we clear this range, you know, I think you get some more back and forth. Ultimately, I'd be in favor more so fading rallies, looking for a deeper cut. But the justification in price just hasn't been there. Here's what it looks like on the 120. Here's what it looks like on the 60. Still doesn't offer much of a tell. Ideal scenario, again, any rallies start to fail at these highs, you sort of get an exhaustion and then you move lower. The break below 96.10, 96.15, in my mind, would be resumption. Not so much because of the lateral significance, but also because of where the slope is at this point. So that's kind of your defining level you want to see give out for a dollar Swiss move lower. It's kind of a loss of momentum. I think markets are still trying to digest all the news we keep getting on a daily basis. You know, the payroll protection plans running out of funds. They need to re-up that from the fiscal side. You got the Fed throwing everything in the kitchen sink at the markets. Doesn't seem to, don't think this is going to be a situation easily alleviated by those measures. All right, next is Kiwi, number 8. Here's New Zealand dollar. And here's what Kiwi looked like earlier in the week. So daily. The level in focus was right here at this 50, 61.12, okay? This has been a decent pivot. If you go back, I think you have to go back to the weekly chart to see it, but you had the median line in there, the 50% retracement in there. You had lots of exhaustion and momentum. Look at price trying to mount the median line 4 days in a row, momentum holding below 60. Remember what we just talked about earlier in the webinar, and steep downtrend structures, you'll want to see 60 hold in momentum, and that's sort of screaming exhaustion for me. Now again, this opening range for Kiwi is even bigger. We opened the month right here, dropped into slope support, rallied into slope resistance. Pivot for me still 59.26, 59.28. But a nice area of which to find resistance, right? Here's what it looks like on the intraday. Okay, same slope, didn't quite make it to slope resistance. There was your weekly open. Right from there, we failed, broke slope support. Here's the April open, 59.60, just lowers that 59.28 level I was talking about. Now again, here into this decline, you're seeing some divergence, price action with a lower low, the oscillator with a higher low. A resistance trigger has broken. So if we take a basic slope in the oscillator, or it looks like it's about to break, keep an eye on that. And you look for a little bit of recovery here, sure. As I told you guys, I've been more in favor of trading Aussie. I think that's been a cleaner trade in my opinion, but if we take this on its face value, this was an objective weekly opening range break. You're looking for a Thursday, Friday low. You know, here's a Thursday low. If this rebounds, bearish inval is now the weekly open. Possible exhaustion would be at the 618. So this zone, if it rallies higher, is what it would need to clear to mark the move higher, right? Like Aussie, this is probably on a larger constructive trade after that low we made last month. But all things held constant now, you're simply coming off uptrend resistance. So yeah, it could get a little bit of a deeper cut while below this region. Beyond here, I want to just bear with me one more time. Just want to see what this retracement looks like. Yeah, beyond here, you're looking at like 58, 58.80s. But this is monthly open support. Monthly open support. Near-term resistance 60.14 and 60.58. Bearish inval 60.85. All right. Next up, British pound. Here is sterling. Let me show you the weekly chart first on this one. Okay, so here's British pound as it stood on the 14th. Big zone of resistance. I'm sorry, this is the daily chart. Here's the weekly chart. The big zone of resistance was, in my mind, 127 into 127.17, the 618 of the yearly rally, and then last year's open, 127.54. We didn't quite get through that high on this. It failed essentially. Again, the weekly low week close from 2018 is right here at 125.82. We need to mount a weekly close above that to keep that in focus. Same picture as all the other dollar crosses we've been looking at, guys. Could see a little bit more of a pullback. Could see dollar give us a little bit more of a stretch higher before we move. Ultimately, we're looking for validation of any type of move off this high to be corrective, because this was a big support bounce last month. So is there a chance for near-term exhaustion off these slopes? Sure. Still want 21.95 as sort of near-term support and bullish inval. That's downslope support. Monthly opening range comes in just right below that. And if we do crack lower than that, you're sort of looking for resumption of the downtrend. Not our favorite scenario. So here's what it looks like on the intraday. And here's what it looked like last week. Oops. Okay, so we were rallying into topside resistance, and we noted that the rally was vulnerable into this zone, right? Because you're basically heading into upslope resistance levels on both time frames. So we never even actually made a test. That ended up being the high as I was writing this report. Once we broke that upslope support, you're looking for a move down towards that 618, 2515 key support zone. Key support zone, post-Brexit low week close. It was picture perfect, guys. The break saw an accelerated drop, saw a little hesitation at that 618, but literally the drop, the weekly opening range low was right at 124.33. Beautiful trade. Here we are into the end of the week, sitting at support. What do? Right? All the shorts we took out into 124.60s didn't even wait into 24.33. But what do you do here? Again, if you get a deeper stab, look for the lower parallel on the intraday chart. That's probably going to take you right into those levels that we looked at on the daily. Right? Actually, no, I don't have it marked up to there. So let me just do this real quick. All right, so if you get a deeper cut, 23.50, upslope support, 618 of the rally for the entire month. This is the monthly open. Areas of interest for entries. If we breach, okay, that slope, we're still looking for 27.10, 27.53 on this stretch. That's only if price holds this. Now, if it breaks this zone, you might be thinking to yourself, well, Mike, wouldn't that be an objective break of the weekly opening range? Would be looking lower? Yes, but that doesn't discount upslope support on this pitchfork. which converges on Fibonacci, a 618 Fibonacci level at 2350. So watch that zone. Topside targets, still love 2710, still love 2753. Questions on Sterling? All right. That's all the crosses on the FX pairs that we're looking at. Gary, was that you wanted? Yeah, Gary wants to look at peso. So this is what I've been writing about daily effects, or what I've written on daily effects about the peso. Look at this chart. All right. It's uncanny how like spot on it has been. And this has obviously been a record-breaking rally, record highs, huge breakouts. I mean, I was writing about this when it broke out the 2019 high we closed, and then this looked like a massive break. This was insane. Once we cleared the 2017 highs. Long story short, the level I wrote about last week and continue to write about is that 25.4400, 25.5400. 200% extension of the advance off the lows from 2017. So this stretch would be double the size. You have upslope resistance for this pitchfork, which we had no clue if it was in play, but upon early touches, you saw resistance, break, acceleration. The median line saw a massive weekly close below after trying to break. That following week, we ripped. And in fact, you did see acceleration. So in my humble opinion on this one, Gary, the top side's still at risk, below 24,820, below that 618. Interestingly enough, the high week close on this one comes in right here, which is basically in the midst of this week's range at 3370s. So that would be like the break that would mark resumption, in my opinion. But you know, it's a hard trade to get excited about, Gary, from like a practical sense, because you're far off the highs already, so your stops are not really well defined, and you're fighting a big uptrend at the end of the day. So while I do think this gets lower, this, I shouldn't say safer, but the more practical trade would probably be look for a larger pullback to buy. I'm just too short term. So in my mind, this thing, the immediate focus is still for exhaustion and a move lower. Does that make sense, Gary? I don't have near-term setups on peso. I don't think I even have anything on the charts. You can see the consolidation that we made ever since the highs, right? Someone must have asked about it because I tacked on this pitchfork. Looks like it could be in play. Gary, on this one, I would say near term, look for a stretch higher and failure ahead of that 2480, 8200, this region here. Look for exhaustion ahead of this for a move lower, is how I would attack this if I needed to, if I felt compelled to trade it. Gary says, cheers, Mike. Love it when your views are the same as mine. Cheers, mate. Again, it's just, it's a tricky one. I write it for the popularity and for the requests, endless requests that Daily Effects gets on peso is ridiculous. But look for the larger exhaustion trade. Look for the larger exhaustion trade lower, I think, first is the immediate focus. Okay, that was peso number 10. Let us hit the commodities and SPX. Here's gold. Well, we're here. We're at the level that we talked about probably for over a year and a half. The 1733 level, it sounded crazy back in 2019 to talk about that region, but here we are. 786 retracement from the record decline off of the highs we made in 2011 when we made the max high there in September. Big zone, upslope resistance. Someone moved my slope here, sorry about that. Upslope resistance, right? For this gradient we've been following, excuse me, from the 2013, 2015 lows. Huge region, huge region. Yes, I'm bullish gold long term, but I think gold's at resistance near term. Absolutely, absolutely. So look, a breach of upslope resistance, typically this should be the sharpest part of the rally. So I love that it did rip, but again, this is broader upslope resistance here from the highs extending off of 2013. I think you got to watch. I think you got to wait for or watch for the possible exhaustion trade. Here's that level. We labeled it right here on the 14th as it was approaching. The daily chart doesn't really have much beyond the 786. We had that slope just higher on this up channel. And then intraday, upslope resistance just off of those lows from March was just higher near 1760s. Here's what it looks like on the daily. And here's, so on the daily, what I wanted to note here is that you still have not made a daily close above 1732, right? And on the daily chart, that's the close that we're gonna need to see to validate that break. On the weekly chart, that's the close we need to see to validate the weekly breakout. Here's our third consecutive day unable to make a close above that. Momentum right below 70, right? So I still think cautiously you look lower here. Ultimately for a larger buy, but near term, I still think the risk is the exhaustion trade. Here's the 120 again. Here's what it looks like, and here's what it looked like earlier in the week. I mean, we came right there. That ended up being the high. Pulled right back. Here we are, just testing it again. You have a decent weekly opening range, but again, it's rather large. But you're looking for a break below the median line to mark a little bit of a correction. 1678 is a level I'd watch. I don't have a retracement on this because we don't know that this is a concerted high. If we break the median line, tack on a quick retracement, and the 38.2 will come in right along slope support. Boom, right? 1633 is near-term bullish inval. So even if you get a drop that low, 1640s, let's call it, you're still within the confines of the ascending trend, right? So bit of an interruption, I think, for the gold rally. If it does breach, by the way, it's probably going to be an accelerated push, okay? So if you see a daily close above 1632, you're probably looking for this upper parallel. It's around 1670s at this point. The 2012 high comes in at 1795, excuse me. So both levels on the upside to look for if we breach. Right now, I still think the risk is just for a near-term pullback, near-term washout lower before resumption. Any questions on gold? All right, last but not least is SPX. Here's what SPOOS looks like. I'm not a big fan. Well, let me just take that back. The ultimate move, I still think, here's SPX on the weekly chart. Put it in log scale. I don't have the retracements on here, but I'm on the daily chart. I'll show you that in a moment. This was, for me, the big level to look for this week if we can get up there. It's 28.75 and 29.32. I know those are larger targets, but guys, look at the weekly ranges. Both of those would converge on upslope resistance. Once this thing blasted through 26.71, it was clearly a bullish trade near term. I still think it may be, but you're looking for topside exhaustion. It feels like I'm saying the same thing on all these trades, doesn't it? The recent move needs adjustment. Here's what it looks like on the I don't think I have anything on the daily per se. Well, here's the daily chart. You guys know my favorite Fibonacci confluences. 100% extension off the low, 618 retracement off the high, gives you 28.95, 29.32. Again, beautiful zone to look for resistance if we get up there. Now, this slope that we added from the 2018, 2020 highs had the median line there. Again, a little bit disappointing that we broke through. We're still closing below. Okay, we only closed one day above. We've been closing below. We're still below that now. The lower parallel caught the lows is the only reason I was still looking at this slope. But long story short, you look at this and you see what would probably screw the most amount of people. And it would probably be one more rip higher to get all those people suckered in again and then rip lower. Long story short, I don't think this is the end of the pain per se. Still think you risk near-term correction while below 29.32. Look for exhaustion into this region. All right, here's what it looks like on the intraday chart. Even the ascending formation channel that we've been watching is still in play. It's still in play. So there's 28.55 October lows. We didn't quite make it on this last stretch, but there's the key region at 28.94. Again, 29.32. Big zone. Big zone. This is where I'd love to see exhaustion for a larger pullback. That said, okay, all things held constant. Let me just clean this up a little bit. Oops. Look for a hold at today's lows, or this was yesterday's lows, right here, 27.53. If you buckle and close below that, it's a simple break of uptrend support. Doesn't really need any thinking. Now, let's say you're not a big fan of slope or pitchforks, right? And you just want to use a basic slope. I recognize that this slope here using the lows does a little bit bigger of a pullback to the lows we made last week, or I think this was this week, back on the 13th, like down here at 27.17. Something to consider as sort of your bullish inval region, let's call it. But first things first, I want to see an exhaustion high, some sort of spike into this region. And that, my friends, is SPX number 12, full suite here ahead of the weekend. If you have any other questions or trade setups, feel free to throw them on the message board. Otherwise, guys, have a great trading day. Good luck trading to the close of the week and have an awesome weekend. Again, don't have much on tap. You do have, I guess today was the biggest print with the jobless claims, but you're pretty clear into the weekend. Watch those headlines with regards to opening. That's going to be the biggest market mover, guys, over the next couple of days. It's not necessarily that we're in earnings seasons. It's not necessarily that going to be just employment, although that would play a big hand. The markets are sheerly looking at timing now. The administration has continued to come out and say, well, we're going to be opening earlier than expected. We're going to be doing this. We're going to be doing that. The markets just need clarity on how long this disruption is going to last. And truly, the longer the markets stay closed, I'm not even putting my opinion on the table here, just objectively. The longer the markets do stay in this pause mode, the greater the destruction, not just from the employment factor, but from just sheer businesses being able to stay afloat, right? Even with these government loans, I don't know. I've just talked to a lot of people who still think that this is going to be pretty problematic if the stop is prolonged. So look for markets to take off cues with regards to references in time, whether it's how we're looking to open, what markets will look to open. If they are going to do sort of a segregated sort of slow open in different parts of the countries based on the risk or the infection rate, then you think to yourself, well, New York is probably still a far way out. I mean, guys, just here in New Jersey, there's over 80,000 infections. So do the biggest population spots, San Francisco, New York, Detroit, Chicago, are these things where most of we see some of these service levels held, are those going to be still in the close for a prolonged period? That's what the markets are trying to gauge. That's what risk tolerance and risk in general will take cues off of. So I'll shut up there, but that's my piece on it. Guys, have a great weekend. Safe trading, and I will see you on Monday in the free session for Daily FX and right here on SB Tuesday and Thursday. Best of luck, guys. Cheers.